just finishing up with class. There's a lot going on today. A lot. And we don't have any clear setups, but chasing Boba. NEX is also quite confusing. I hope everyone's doing alright. We're just starting up for the stream. Let's have a look. Wow. Accounting's beautiful. It's just an amazing, amazing concept. Yeah. $261 pre, still falling. I think I might do a podcast where I talk about why I think Alibaba is a good investment, in my opinion at least. Not now, but if we can get the 240s. Whoa, FTSE at £63.60. It's at £64 res. Accumulated depreciation. Switch over retained profits. Same thing. Very smooth. Okay. That means we're done. Nope, we're all good. Lesson over. Okay, welcome back to another live stream from Quantium Research. I'm your host, Ryan Kia of quantiumresearch.co.uk and Quantium Research Limited as of a couple of days ago. Speaking of which, I completely missed the bank account stuff that I needed to sort out today. But what we are doing is we're going to have a look through some potential ideas for maybe future streams. We're not forcing ourselves to trade today. We're not expecting anything. But once again, markets always have opportunities everywhere. So we're going to see. We have a lot of stocks we've been observing as of recent. I want to add to that list. I want to also plan for Alibaba because I may have a fair bit of exposure if I'm really going for this. You know, we're talking about a 3 black crows setup on the chart. Normally, chart setups aren't that meaningful if you're buying a fundamental thing. They're only meaningful in determining the trend. But 1, 2, and you'd expect another day just gapping down. And that's what they're going to do right now. 262 pre-market. About an hour and 40 minutes till they open. They could easily gap down, test that. That's not a pretty setup, I must say. I wouldn't be inclined to go full size. But I kind of want to be in these guys. Because regardless of Trump administration, Biden administration, in the Trump administration, right, China had their shares doing really well. They didn't outperform the US, but still, it was a nice bit of performance. Interesting here, Rolls-Royce really trying it, but actually on the brink of failing and going lower. I think the new shares hit the market tomorrow, so I would only expect them going to 80. But once again, that's a binary bet. Whether the liquidity, people are selling now expecting that, and the event is the price rising because there aren't enough sellers tomorrow. All of a sudden it's sticky. I don't know. I think if you can get in at 32 pence with the rights issue, you're obviously going to take some profit. So my inclination is it's going a little bit lower. But we shall have to see very shortly. Let's have a look. So we're live right now. I'm going to set up the chats as well. I apologize at the moment for any of that. We are live now. Live screening for ideas. No, wrong link. Yeah, Rolls-Royce. I'd love to short them, but I don't chase trades. Even though I could make a fair bit of money. It is what it is. Because we closed at 108 and we said, yeah, it's definitely going to do 96. That's what I said yesterday. But the problem was, it did what? 114 in the morning. That would have spooked some people. You see, that 4-point spike wasn't an issue. But who's to say it wouldn't have stopped us out before the trade going out? That's why we held when the probabilities were most in our favor. We only made a little bit of money. The amount of risk we took was very disproportionate to the reward we took. That's why I was upset with it, even though it was a profitable trade. Normally I wouldn't take that much risk versus the reward. Otherwise you wouldn't have the trade. Why would you risk 300 and something pounds to make 60 and also spend 4 hours on the trade as an intraday trade? But count your blessings, eh? So we're live right now. I'm gonna put the tweet out. Absolutely love Twitter. There we go. Chilling with it. What? There we go. I'll use that as well. Setting it up. Sorry if there's a little fridge sound in the back. Basically, I still haven't got that thing sorted out. I need to find a box, a huge box, but I've still been trying to fix this carpet. I guess the housework stuff, I'm a little bit behind on that. Did the washing up yesterday though, all clean. Here's food. Speaking of which, left some food in the fridge. Made way too much. Made two portions of food. Bear in mind there's only one person to feed. Generally after a long day I'm not really too hungry. Hello mate, Adan1932, how you doing? Welcome back to the Quantium Research live stream. You doing alright? I hope you're having a wonderful day, afternoon, evening, whatever it is, round your parts. We're looking at Alibaba right now. The shares pre-market ahead of the US Open, they're dual listed, so they're listed on the Hong Kong's exchange, I believe, and they're also listed on the NYSE, New York Stock Exchange. So we are not too bullish at the moment, but we're trying to evaluate for a long-term investment. And in the meantime, I thought it would be good to go through their financials too. But before that, let's look at a couple top stories today. It seems that the headlines include things like Europe defensive stocks rise, a tech sell-off pauses. You've got a couple of tech companies up pre-market. Well, exclude Alibaba. It seems that China's not winning at the moment. The defensive stocks, especially in the UK, include things like BT Group. BT Group was about 120 pence from their 100 pence levels that they were stuck at for literally months. Now, boom, they're exploding. One of the best returns on defensive stocks you can get beyond defensive travel and leisure, because they'd already spiked a fair bit. But look at that 98p level. I'd mistakenly shorted it on the first attempt and lost about 2 pence a share. Didn't again because there was far too much consolidation. Look at that now, healthy, breaking out. Now that needs to hold. Same with NEX, National Express, breaking out. That needs to hold. These are all daily looks. We could. Who else is useful to add here? I probably wouldn't. I'd look on the contrary now with the ones that rise when the market's down during this whole Corona crisis, at least. Games Workshop had a correlation with the market. They fell when the market fell, but then the market started rising. They rose even more. The market fell. They would still rise. Now there is almost an inverse correlation starting to happen. You can see 3 big red candles down, and you can only really expect it to test this rising level of support here, probably around £78, £80 thereabouts. And AO World seems to be holding its ground. We actually thought with that break below 370 or so, we were going to see the 250s, 300 or so. But they're holding up. The setup isn't that beautiful though, so we're not a fan of it. I wonder though, NEX at 232 is so expensive. I actually had the audacity to wait until they raised money. And just so you know, that is not likely to happen given their share price. If they do raise money, I don't think there's a cheap opportunity in there at all. But it's a shame. This was where I would target them if I could get 100, so I'm not really interested anymore. Rolls Royce as well, 102. I think they're going lower, but we're not chasing the trade. We didn't get to much higher levels. What are we going to do short when it's much lower? And get only a small proportion of the move? Probably not. What else is there going on? Big stories. Quants with $1 trillion poised to buy stocks as volatility falls. That would make sense. You've also got the switch from growth stocks. So Baba is probably an example of a growth stock. Apple, who else? Amazon, all these guys. Growth stocks, low kind of realizable assets, but high growth in revenue and managed customer basis. That even includes Zoom. They can consolidate a huge growing customer base. You get 50% revenue growth, user, all that stuff. And then you get the point where you can actually monetize that audience. So for example, TikTok has a billion odd users at least. They can keep those users and then start putting ads or maybe some way to make money. And they can make a lot of money. You know, you're talking £1 a person, £100 a person. That's a lot of money. And that can be recurring revenue. So that's why these growth stocks seem to have a lot more value. Alibaba's one good example too. As we'll look at their financials in a bit, briefly, and I will go into detail in a podcast. I've been meaning to record one recently, but this house stuff of the carpet has been a huge headache. Still haven't fixed it, by the way. 2 deep cleans later, 1 maintenance visit. Now, I'm just going to have to see if I can get it replaced. But it's going to take some time. So, that is what's going on there. We'll probably have a look briefly at Baba's financials, if anybody has come across them before. Also, if you guys have already looked at Alibaba Group, what do you think? What are your opinions? What are your fears investing in China? One obvious fear is that they're going to delist in NYSE and stick on the HK exchange and then sort from there or whatever. But that delisting rumor could just completely wipe out your value. I don't know, part of me thinks it's possible, but I don't believe it. I think it's smarter for the Chinese investors to be listed on an exchange that is soaring consistently time and time again. Yes, theirs is good, but this one outperforms theirs. So by having a dual listing, you have the attractiveness to hedge funds, mutual funds, and the like to get the money inside. Hey, Kartik, how you doing? I haven't seen the YouTube chat. I just seen a message deleted. But how you doing, man? Nice to see you around here. Welcome to the 4 people on the YouTube live stream. And on TradingView, we have 3 people. Adan has come through. I'm doing well. I really like your TradingView page. Did send you a DM. Thank you, Adan. I appreciate you. I will check that out privately on my page. Thank you, man. I will look at that message in a bit. Appreciate you sending a message. Hope you're doing okay. If anybody tuning in right now, how are you doing? You feeling okay? It's been a rough couple of days with all this volatility. And it's hard to stay on top of it. Sometimes you've got to give yourself a day off and step back. This stream's going to be about an hour. I'm not planning to do it too long because I think I've done a bit too much for what I feel like I can take without resting a little bit. cut my sleep back a little bit. Not great. But still, we gotta always wake up on time. Had classes from early until now. Just finished. I got another class in 2 hours. So an hour I could probably have some lunch. Something simple. And then prepare for a long evening ahead. So for Alibaba's financials, we're going to pull up some of our research right here. Market valuation, I'm going to do everything in dollars because that seems to be the best use. Market cap right now, this is at 266. So we take 2% off the figure. I'll probably actually calculate that to be a little easier. 264 actually, 1%. So 721, 999. So they're about $713 billion strong of their market cap. Early 2020, they were 522 billion. 2019, 470 billion. 2018, 470 odd billion. 2017, 272 billion. So they have definitely had some form of impressive rise. I mean, if we look at their shares, let's just pull it like this. Don't like this format, but you have to, for the sake of comparison, let's go even lower. That's an interesting trend, isn't it? 2016 shares was $60 odd, 60, 107, down to 82, 82 to 190, down to 125. And this was 2018. That was the correction in indexes. That's why they moved so low. On the recovery, still a decent amount of volatility. March 2020, I don't think you had... Oh, this is the corona crisis. Okay. And then you had a further recovery. So it seems that generally, as long as you don't have a wider negative move in indexes, these guys seem to be doing well. They listed around 2014. They listed at $100 a share. Consistent way down. But on the financials front, they seem to have nothing but growth. Revenue, 23 billion to 2017. Next year, 37 billion. That's 58% growth. 2019, 56 billion, 50% growth. 2020, 73 billion, 35.3% growth. And already year to date, they're expecting that to be around 83 billion for the trailing 12 months. And that's 29% on top of what they expected for 2020. That is crazy. And for Singles Day, an event in China, they managed to do $58 billion, apparently, in 30 minutes. I don't know what the news is of that, but that's a lot of money. So the forecasts of 104 billion 2021, 135 billion 2022 are much lower than what they could be, which is crazy. You never really expect those massive numbers to be underestimates for once. If we can have a look maybe at their history of beats versus misses in terms of earnings, this could provide a little bit more context. So I'm just going to have a check on the chat whilst I'm here. Nothing in the YouTube chat. And Adan says, awesome. Thank you. Appreciate you, man. Appreciate you. All right. So, well, couple admin things to do today. 11th of November. Oh, I think it's a family member's birthday. I shall call them in the afternoon. Okay, so for revenue of the past 8 earnings announcements, Alibaba has given 7 beats out of 8. Earnings per share, 8 out of 8. Earnings, that's adjusted. Earnings per share, gap, which is under the US accounting measures. That's 8 out of 8 times. You do expect that. Net income, 8 out of 8 times has been a beat. In fact, let's see if we can graph that real quick. Okay, so quarter, maybe gonna have a look at this real quick. Quarter 2 2020, expectation 26 billion net income, real 35 billion. Expectation net income Q3 2020. Now bear in mind this is a year behind because it's Q2 2021 on the US accounting system, even though it's the end of 2020 now. So Q3 2020 expected net income 42 billion, actual 46 billion. Quarter 4 2020, 16 billion expected, actual 22 billion. It just seems like a company that continues to win this time and time again. Q3 2021, that's the next quarter coming up. They're expected to do 57 billion. That is their biggest ever quarter by looks. And the quarter after that, only 35 billion. The thing is, when people use new platforms, they generally catch on. They generally hold on to those things. New businesses like Zoom and stuff, yes, you can have alternatives. But Alibaba's been doing this whole e-commerce thing in China better than anyone else. In fact, they're only in China for the majority of their revenue. I wouldn't say everything, because yes, they have some diversified revenue sources. But what if they lose a little bit of money spending 700 million elsewhere? They're still making a ton of money. Literally, it's an empire. I've never seen a company this interesting with that kind of growth maintained. You'd think accounting fraud, right? Too good to be true or whatever. But nah. They're not on the good side of the government, though, it seems, in China, with the recent suspension of Alibaba's... Alibaba owns 33% of Ant Group. Ant Group was going to be the largest IPO in history on, I think, the Shanghai Stock Exchange, or one of China's indexes. But it didn't go through. It might in the future, but at the moment, let's look at price earnings ratio. Trailing price earnings ratio around 45. I think that's unfairly calculated. I can calculate myself roughly and give you a better estimate right here. Let me go back to my notes. So expected net income 15 billion divided by 721 divided by 15 billion. No, actually 48 is fair. That's me. My bad. The reason is 2021 they're expected to make 27 billion in net income. So if we do that on today's market cap, we can give them a forward price to earnings ratio of 12 months of around 26, 27. If we compare them to, I have some data on my phone about Apple and the other big dogs. Let's see. Do I still have that open? I don't think I do. But I think Shopify is trading at around 200 on a price to earnings ratio. And that's the expectation that they're going to deliver that 200 years worth of earnings, and then you can put them at a fairer value. I just don't see it personally. But I'm not shorting them, because once again, there's nothing negative, there's just not much more positive. Free cash flow figs looking alright in my mind. Revenue 104 billion expectations, so they'd be trading at around 7 times price of sales, but that's for trailing 12 months. For the past 12 months, forward estimate. But for the current situation, about 8.5 times book to sales. Okay, check the chats. Chorus Robert 102 comes here and says, hey, I'm new here, how's the progress? Hey Chorus, so what I'll do is I'll pull up our brokerage account. We actually have only placed one trade on this new series. We started literally a couple days ago, so don't worry, you're not missing out on much. You're very, very new, as we are. A lot of people have come through, which is really nice to see, but this is the first session we've actually gotten out of the way. I'll pull up the account. Okay, so we had a trade yesterday. We were expecting to lose our first trade, But we ended up making very little bit. Nothing too huge, but every penny counts. Let me pull up the brokerage account. Okay. Boom. Can you see that? This. Click the drop down. That shows how much we got right now. £10,067.24. So we made about 60 odd pounds for yesterday's session. We were expecting to lose about 200, so that was nice. We're not rushing into any trades right now. I'd prefer to use this session to screen a little bit. Alibaba. That's positive price action. Gap down pre-market. Try and hold up, then reverse. Cineworld, got a couple of these, nothing special really, no clear setups. We would like to short some of these guys, but once again we follow a system, and the system gives us no clear signal here. Chorus though, appreciate you for coming through. So we are up 0.6% a couple days in, nothing special. Normally, what happens with us is we take a lot of small losses, or we stay very patient like a grasshopper. And then the one big trade you'll just catch, you'll watch it, and it will be like an amazing, amazing day. Damien Duper says, buy gold. Well, let's pull up gold. XGLS. Wait, no, that's an ETF. XAU USD. Let's put it up. Well, right now, it doesn't look like the prettiest of ideas. If you expect the market to go down further, then yes, you'd probably buy gold. At the moment, things don't look too pretty, being completely honest. I mean, test what? Where's the next level of support? They've already done that, 1844 or 1815. My long-term view, though, is if, of course, indexes start to have some tail risk events going on, which there is a huge probability of right now. It's not just coronavirus, it's banking, there's so many other things. Even a vaccine doesn't get everyone out of it. I'd expect 2100, and I think that was the previous level of res tested, yeah. So I'd be bullish gold, but I'm not sure if I'd be buying now. I'd wait, a couple more days, weeks. Things look like they're going to be alright. That's normally when others are greedy, you get fearful. When others are fearful, you get greedy. As Warren Buffett said, not exactly in that way, but I hope you guys get my drift. Don't always think that everything's all peaceful, because then an anvil will fall out of nowhere on you, and I bet that hurts. On the 15-minute chart, let's have a look. Problem is looking at one time frame and using that as your reason to buy is very, very risky, because if all the other time frames are bearish, then shouldn't you be bearish just by logical deduction? Or if you have an inconclusive result, don't trade the asset, might be a better idea. Well, right now, if they can break above, really, I'd like some clarity. Actually, I'd like them above 1894, something like that, 1895. If you could get that, because here you think, yeah, okay, breakout. Well, look, you can have a spike, a reversal. 1894 or so. Then, yeah, that would be a long trade in there. Not worth it for me, personally. But that's because my capital structures for trades are generally quite different. Up 1884. I don't think it's going to retest that, to be honest. I think a little bit lower in the near term. But I'm not trading it, so don't take my opinion for really anything more than face value. Alright, so we were looking at Alibaba there. To make sure I nap a bit later. There's far too many things I need to attend to today. I think we might only run this to Q2, yeah. Because I've got a class later. I need to get someone else in to fix this smell. Left my windows open while sleeping. Doesn't make a difference. But this is an introduction to us looking for some new ideas, screening about, and seeing what's around the market. So, what I am thinking of, I don't think I have live prices on this account for gold, so this could be delayed. Apologies. I'll pull up live prices from here then. Gold 1871, much worse. Copper 31.46, interesting. And for the impact it has on companies as well. Oil is up to $45. Wow. Some of these companies have break-evens around there. They're going to have huge losses, but my interest would be Tullow. Tullow is up for 13%. Actually, I'm going to investigate their chart right now. They seem to be the least problematic one of all. On the brink of a breakout. What do you expect? What do you expect? Wow. You know what? I'm not even going to lie to you. I'm interested. This is a little bit more volatile, so our trades would be a little bit different. I'm definitely adding them to our watch list. Oil is something I think $50 is fair value for this year. And if they can get above 50 and consolidate, well, aren't things beautiful there? Problem is, it's very difficult for this to maintain. There's no clarity yet. Look in terms of near-term price action. Okay. I'll just have a look at the chat real quick. Oh, because I don't have the pop-up, so I could have missed some messages. Forgive me. I'm gonna look back on our trading chat pop-up. All right. Cool. Now we're all good then. Smooth. How is everyone doing on the YouTube stream? Nice to see some new faces as well on YouTube and TradingView. Shoutouts right now to Errol Delkson. Appreciate the follow. EAB_ pro user. Ooh. Blue Marv Pro Plus user. Appreciate you. Showball. Antmaster 2001 and Wolflers from yesterday. Appreciate you all for that support. If you haven't already, please do subscribe to our YouTube channel on Quantium Research. That's what it's called. We have 368 or 369 subscribers right now, and we're trying to hit 1,000 to properly get ourselves out there, get these new stream ideas active. Okay, so these guys cooling off a little bit. I do like the look of them. I don't like Premier, being completely honest. I don't like them anymore. Especially given that recent merger. Whoa. Well, they like themselves. Right at the day highs, I wouldn't be surprised to see that. Wow. That is pretty. That is pretty. Well, where would I expect them to slow down? 20 pence. I'd pay attention to oil, personally. I'm going to have to look at Tullow's financials, loss forecasts, all that stuff. Because I haven't looked in probably 2 years. Let's have a look. On order market cap is at 23 pence. 447 million. Revenue expectation 24% decrease on a 15% increase, 15% decrease. So a 400 million expected decrease in revenue, down from 1.6 billion to about 1.25 billion. Loss expectation is 750 million. Makes sense. How can they finance that though? That's what I'd wonder. Have I added Tullow here? No, I haven't. Well, I like the fact that Premier is exploding properly. Tullow hasn't yet. But the thing is with Premier, this merger doesn't benefit them. It benefits Chrysler. And I'm pretty sure their valuation is going to be effectively worthless. Yeah, 18 on Premier for continuing. I feel like they're a laggard, so I'm not too interested, being completely honest. Let's have a look on this new watch list then. We got a new friend to the party. Alibaba's positive almost. Could still gap down. We're not going to catch the US session for that. But if you're interested, have a look. Next time we'll be chatting about it in a little bit more detail. Okay, so cash for Tullow. Cash 288 million. No, that's not pretty. That means it's raise territory. One spike, raise money, book build, accelerated, all that stuff. And then all of a sudden things will be good. I'd target 30 if I was going long. Not a huge reward, but it's decent if you see that break above 25. Spread right now, let's just say 0.4 pence, or add a little bit more on top. Wait, mathematically actually, I'll do it exact. 0.7 is the safe. No. 645. 0.645, so 64.5 pence. Above there is a guaranteed buy. 27 console. There. Yeah. Interesting. We don't want to be getting in expensive. Very, very volatile one. Difficult to trade these kind of stocks. Yeah. Looking around, I don't think there's anything clear for today. I'm gonna pull up my screener and whiz through some charts real quick. So Okado up 5%, £22.74. Not interested in that respect. Who else is there? Oh, if the markets are recovering, Flutter's one to watch, surely. Only problem I've got with Flutter is they merged or acquired PokerStars. That's a business that will do well regardless of crisis. Are they down from the... Wow. So vaccine takes them down 15%. Still in trend. I don't think they're going to break trend, to be honest. Would I buy them? Not so much. Not a fan. US 500, 580s res, FTSE 100. Part of me builds towards £64 a contract. Okay. Yeah. Type some stuff on the Twitter about our stream. NEX dollar W dollar JKS hashtag. What else are we looking at today? TED hashtag FTSE 100 hashtag CCL hashtag Sinner hashtag TLW hashtag PSON hashtag Alibaba. Has anyone ever seen when, what's his name, the guy who founded Alibaba, Jack Ma, When he's trying to say China, instead of saying China like we do, he says China. And he says it with a really like Texan accent. You just think he's a strong Texan. Also, to this watch list, we're gonna add Brent. Oh, talk about testing. Res, mate. China. Alright, let me check the chat real quick. Smooth. Alright, so who's the highest faller on the FTSE 100? Informer and Rolls Royce. Anything special that I haven't seen? Nope. Anyways, let's get off this page. Let's go back to our screener. Change some of our criterion. Feeling creative today. I'm just playing. I'm never feeling creative. It's always sticking to the strategy. Any ones there that suit the criterion? Oilers are finally doing well. Yep. Associated British Foods at £20.60. They're up then. Jeez, we were trying to get them at £16 for an investment. Wow. So we were right, but just bad timing. That's unfortunate. Oh well. I don't class as a breakout. I did a backtest on these guys. They're chopping between important res all the time. Let's switch to another tab. And the others we're looking at. FSJ, who are they? Fisher and Sons, 880 up 11%. Actually, they're the kind of company I like to short, I'll be honest. Yeah, that kind of test here, try and fill the gap, never does. But if they do, I'm adding them to our watch list as well. On here, not on the account though. Not that clarified. Okay. So National Express at 231. That's some spread, eh? A little penny. Excuse me there. Yeah, I'm probably gonna get an hour's rest. If I don't oversleep through my next lesson, I rarely do that. But I feel like today my body's tired. SIG is another one. That's Signature Aviation. 251. Not interested. Wait, why is EasyJet still £7.30? I'm not a fan of these guys. I would like to short EasyJet, being completely honest. I don't think they are. Yeah, I will pay close attention. Yeah, have I added these guys? Nope. I have added them to our trading account watch list. First group, 57 pence. I'm not too fussed about them. I don't think I'd be going long based off my research. Yeah, that is a good close if it maintains. That's a really pretty setup. You know, let's see how the D was. Can I be honest? I wouldn't mind them going to 50. It's 12.5%. Yeah, I'll add them to the watch. I think I could miss this trade. A little bit too late to party. Only 2 pennies. Alright. Lol 10k, says Erlang lol. Yeah, this is the challenge. I've just put 10 grand in a separate account. It's not huge money. The rest is in my own personal account. But I think this is a great way to kind of show some entertainment. You know, for people who may have not traded before, or people who want to watch someone trade, kick back. The beauty of leverage these days, it doesn't really matter how much you have in your account. It matters how you manage your risk. And yeah, if I wanted to put more than 10k, I could easily. But I like the way of 10k for also branding. It's nice for our new YouTube channel and just getting our name out there. I personally manage whatever assets I have and can grow. Any penny that comes in that I don't need to use immediately or within the next year, I put in my own personal broker account. And I buy whatever I feel that can create more value than that cash being sitting in a bank or on an index tracker. I suggest most people do that. It's very risky though if you're not sure of what you're doing. It's a valuable life skill to know how to make some money into more money. But it's never as simple as that. But appreciate you for coming down. Nice to meet you. We've just started streaming as of recent, so the 10k PF literally is only up £60. We only had one trade that we were expecting to lose, but timing, whilst it didn't work out in our favour, wasn't that great. Most like people who do like full-time day trading on live stuff, either they use these Top Step funded accounts or they have huge amounts like 150k, a million, which is fair because my income is on my own personal portfolio. This isn't my income. I'm expecting to keep the money in here for 3 years. The only time we'd ever take money out is if we're doing like a charity stream where we'd say, all right, whatever we make for that session, if we do make, goes to a given charity. Then I take that money out, obviously. But I'm here for 3 years, not expecting to use this money. This is money that I'm prepared to lose. I probably should have given the background story, so my apologies. I've been in the arena for 7 years and now 4 months. I said 3 months yesterday, but it's 4 months. And I started with a super small amount, and I was trading small caps, the riskiest of them all. Very dangerous game. I wouldn't recommend people start there, to be honest. And I fell on my face in the first couple of weeks, months. Then I developed a little strategy, did okay for myself for a good couple of years after that. Then I transitioned into the whole trading world of larger caps, more liquid companies, and eventually I've developed my system, which is largely quantitative. And you can see sometimes I'm mentioning different elements of my system, different parts, why I can't do this, why I can do this, or whatever. And that is part of the process for discipline. So after doing this for a while, I don't seem to have much emotion with regards to my trades, whether I'm up, whether I'm down. Like yesterday, we were up at the end of the session. I was actually not expecting that, but the reason why I was frustrated was if I timed it a little bit better, it would have been a real nice session. And there were 2 trades, we were very close. We had an order on both of them, and the order didn't fill. And that was my fault, being too conservative in my price target. Should have been a little bit more precise, because my stop would have been 20 points on Rolls Royce at 140. If I was getting in 137, I could have got in, and I could have made 40 points easy, like straight after that. But you must pay the price, and I did, unfortunately. Zalo seems to be breaking or testing the breakout. Can we add them to the list? We may not have. Let's pull them up. Look at that. Price action is beautiful. Needs to cool down though. 24.99. Okay. Probably gonna dip in a bit. Because I don't think there's anything too special to cover. Barbar's opening would be interesting. Still haven't conferred as to where I want to get these guys at. But it's okay. So let's pull up our screener again. Megit at 388. I don't know why they're coming up. Personally, not too much of a fan. TUI at 391. Oh. Gonna add them to the watch list, but that's gonna frustrate us. That is a marvelous way. We'd have shorted, get stopped out, shorted again. And that would be a little win. I'm gonna add TUI as well. Because that 391, well, their ultimate kind of bottoming point is 2.6s also. So really, next way down is 100s. But they got 2 billion in liquidity, so that's going to last them a year more than what I expected. So it might last them 2 years. The exact numbers I would look over if I was interested in shorting them. I don't think I am. AO World though, look at that monstrous reversal. Whoa, 20%. So we were trying to get 250 to even 300. 330 was the bottom for there. Not pretty at all. Actually, oh, I completely forgot. I left some stuff that I needed to get in the post. I think I'll. Oh. Okay. Yep, I gotta go make a call then. So, this is a conclusion to our session. What do we expect? Well, we would have been looking at Tullow breaking above 25, specifically 25.50. Easy target onto 27.30 or so. But at the moment, we are not going there. But if you're looking at heavy movers, follow the oil industry today. The US oil industry had one of its biggest days in a very long time the other day. We're probably looking to end this stream right now. So thank you for anybody who's come through. This was quite a short one. We didn't get any trades, but I'm slowly building my mind for some new ideas, which is nice. Just gonna look through a screen one last time. Am I missing anything that I've been following recently? PFG, Provident Financial 287. Nope, not interested right now. Relatively positive day for the markets. Let's see. Kyuku's Kinetic here. Petrofac. ITV CAS. Personally, I'm not a fan of ITV in the long run. But they've been beaten so much. Do they have any value in them? ITV is actually a good trading share though, I must say. Yeah. But anyways, Alibaba at 264 to 265. It's negative. As long as it's negative, it's another gap down, which is a continuation of the initial setup we talked about. We assume them going from 320 to 260 is almost a 20% move. That is essentially what happens when there's a down move in the market. So they are struggling right now. This is another wave down. If I'm being perfectly honest, I think they could even test. Let's determine this over. 221, briefly reverse over 240 and continue upwards. If they go any lower, yeah, that would be ugly. I think I could lose 20% if I get them at 220. If I get them at 240, yeah, we'll monitor this, see how quick the way down is. And I'll make a podcast very shortly about my thoughts on these guys. One, I wish I could monitor further. NEX for an intraday reversal sub 216. If that were to happen, that would be amazing. The most of the sector is looking like it's doing the same. But at the moment, no clear indicator. So, yep, I shall be back soon. Appreciate everybody for coming on down. Gotta make a couple important calls. The 3 people tuning in on YouTube, yep, we are done for the day. We haven't placed any trades. We weren't intending to, but this was a quick screening session. This is kind of a look into what I do, or what my mind processes when I'm about to plan some trades or get some new ideas. Everything's kind of whirring in one's mind. And yeah, some things don't work out, like AOL didn't work out. I thought it would be an amazing trade, or an investment, but it didn't work out. It's fine. Alibaba could work out, could not work out. Well, to find out what we do next, keep watching the stream, stay subscribed to the Quantium Research YouTube channel, and I shall see you all on a future occasion. I've been your host, Ryan Kia, of the Quantium Research live stream on YouTube and TradingView. We're also on Twitch, but we're having a bit of issues trying to get all 3 working at the same time. YouTube's much better. And I shall bid you farewell and catch you all on a further future occasion. As we say, always. Until next time.